I'm going to kick off the meeting now. This is Rob Hack from the Hawaii Pacific Export Council. My day job is Insight Inter-Asia, where we help people export from Hawaii around the world. We tend to be focused on Asia here, but that's not necessarily what we need to be focused on. We can certainly export from Hawaii to Canada, Mexico, Europe, Latin America, Africa. But being in the middle of the Pacific Ocean, we tend to focus on Asia naturally, and Japan even more specifically. Speaking of which, we have an upcoming meeting on June 28th that focus on the Tokyo International Gift Show. Please attend that. I would also like to thank Jamie Lum and DBET and ask her to speak for a second, because with the generous grant that we receive from DBET, we are able to put on this series of seminars and teach the Hawaii companies how to export. So with that, can Jamie please say a few words?
Hi. Aloha, good morning, everyone. I'm Jamie Lum. I'm with the Department of Business, Economic Development, and Tourism. And just thank you all for being here this morning. As Rob mentioned, we do have a grant from the Small Business Administration, and we're happy to have both Jane Sawyer and Mary Dale here from the SBA Hawaii District Office. It is a grant that we apply for every year. It's a competitive grant for the State Trade Expansion Program. And the whole idea behind the program is to help companies, and this is nationwide, it was really to help U.S. companies increase the amount of exports. It's been a couple of years that we've been going in for this grant and have been fortunate enough to receive some money. We call our program the HiSTEP program, Hawaii State Trade Expansion Program. This seminar that you're at this morning is part of the export readiness training, which is one component of our overall program. We do work with the HPEC, Hawaii Pacific Export Council, and with the Small Business Development Centers to help companies put on these seminars, one thing, and then they also help provide counseling and mentoring for companies so that you can put together, if you don't have an export plan, put one together, or if you have one, you can refine it. So that's one aspect of the program. That's to get you geared up to participate in other aspects of the program that we have, which are the second thing we have are our Hawaii pavilions, where we go into selected trade shows and we recruit companies from Hawaii to go in. We go in all together as a group under the umbrella of the Hawaii brand. And this has been very effective for our companies and been very popular. We subsidize the cost with the STEP funds of the trade show and so forth. So that's another component. And the last component is our financial assistance program, which for 2017, the funds have already been distributed. So with the financial assistance program, companies can take the export plan that they've developed through attending seminars such as this, through working with people at HPEC and the Small Business Development Centers, and submit that for an opportunity to receive some funds to help implement portions of your export plan. So we are required to report to SBA on results. So we do ask companies that receive any sort of services from this program to report any kind of sales that you receive. We do, going forward, SBA has actually put out the next program announcement, so we'll be going in to try to get some more funds for 2018. They are also wanting to look at job creation, so that's going to be another aspect of what we'll be asking companies to report on to us. So that's kind of it in a nutshell. I'll be here all throughout the seminar at the end if anyone has any questions. But again, thank you all for coming, and
Thank you. Thank you, Jamie. I'd like to add one other thank you to David Sicking. He's the manager of this whole facility here at FTZ 9. and they generously allow us to use this room, which is a fantastic new facility. So thank you very much for allowing us to be here. I have to add our normal disclaimer also that while we're live here, this audience, we also have an ongoing webinar, which I'm running from this computer here. We're also videotaping it as we usually do. We will edit the videotape slightly later and then upload that to the HPEC YouTube channel and to the DBET website for further viewing. So please understand the disclaimer is that any questions you ask will be out there in the world, live and later videotaped. So if you don't want your questions out there, please don't ask it publicly. Save it for later when we'll have an Ask a Banker session or what have you. But we welcome your questions, and I wouldn't imagine that you would ask anything that was that proprietary that we couldn't all hear it. So with that, let's get on to our finance seminar. We're very lucky to have Naomi Masuno running the program today. She's on the board of the Hawaii Pacific Export Council, HPEC, with me. And she's our resident expert on export finance topics. So we've asked her to put the program together today, and she's brought in all the bankers that we can talk to later. Please save your questions until the end when Naomi can ask, and also the people who are online can ask the questions and Naomi can answer. Okay? So with that, I'll turn it over to Naomi, and please, thank you.
Thank you. We are very lucky to have Jane Sawyer from SBA, and thank you very much for SBA providing the funding for these classes for people to learn about exporting. So we will hear from Jane in a little while, but I wanted to let you know what's going to happen today. So we're going to hear from Jane. David Sakink has a few words to talk about the foreign trade zone and what what facilities he has here. Then we'll go around in just a few minutes, just a minute each, if you can talk about what you want to learn here, why you're here, what you do, and then we can get to know what you need. We want to make sure that you're getting the information that is going to help you to export. Okay, so we have that in the beginning. Then we'll have methods of payments, 10 minutes with Dennis Wong from Hawaii National Bank. Then we'll go into the financing options, the different types of loans, and then the credit process. We'll take a short break where we can set up a video with Exim Bank. I'm not sure if that video is going to work, but we're going to hear from the Export-Import Bank of the United States. We have a director that's going to be talking to you directly about the programs they have. Then he'll talk about the credit insurance and their products. Then we'll have preparing a loan package. Then the Ask the Banker is at 10:30. That's where you can sign up and sit with a banker and just ask whatever questions you want to, one-on-one. So we try to spread out throughout the room, and then you have a little bit of privacy to ask your questions. So if you could write down your name and the bank that you want to talk to, so you get 15 minutes FaceTime with a real banker. So for now, thank you very much, Jane, for coming. You're very busy, but thank you for putting on the grant application and giving us the money.
Aloha, good morning, everyone. Jane Sawyer, I'm with the U.S. Small Business Administration, and we've been involved in the exporting assistance business for quite some time. We do work with training and consulting for businesses who want to break into exporting, and that's a really important thing to be able to do. It is different than your normal business that might be happening when you sell to consumers right here, you sell to other businesses here. When you're looking at going outside the United States, there are a number of different rules and a number of different cautions that you need to be aware of, and that's why this program is so great. This is a particularly important thing to Hawaii, being such a small, isolated state, and I think it's great that DBET has been able to step it up and come forward to get these grant funds every year to help train more exporters, get you to more places to learn about how to export, to establish those relationships, and we've had really some great results as a result of this program. So I encourage you to stay the course. It takes a while to put it together. Sometimes it takes a while to establish. those contacts in other countries, as well as establishing contacts with a banker who is going to put the confidence in you and be able to help fund some of your international transactions. Now, Mary Dale, who is here from my office, has been doing export assistance work for years and years. She knows a lot about our export assistance financing programs as well. So make sure you take some time to talk with her today because she'll be here. I'm pleased that we put out the STEP Award grant again this year because Hawaii has done a great job. Our small businesses have been able to report significant results. So Hawaii is considered one of our top grants, and even for a small state, we tend to get a significant amount of grant money to get you out to Japan or to the surf shows or to biomed shows. So there are a lot of different things. Your ideas need to be proposed to Jamie and the folks at DBED so that maybe your options and your ideas are realized and we can help you get to where you want to, because exporting is definitely one of those areas that's going to keep our Hawaii economy growing and strengthen it even further. So thanks for being here. Keep investing the time, and good luck with your export ventures. Thank you.
Hey, Jane, do you have a special waiver of fees still going on for your loans?
There are only a few right now, so we're not, on the smaller loans, we have some fee waivers because with the SBA guarantee, if you understand how SBA financing works, you work with a bank, we provide a guarantee. Maybe you don't meet all the underwriting requirements of the bank, you don't have enough collateral, it's a newer project, they think you're a higher risk, so we will offer the bank a guarantee depending on the type of the loan. But there are borrower's fees and there are lender fees. And we've been waiving some of the borrower fees to make it a less expensive proposition for you to get funding. So it also makes an SBA loan not only doable, but definitely more affordable.
So that could be a 2% fee waiver up till September 30 if you get a SBA loan by September 30.
So that's a thing to talk to Mary Dale about. Mary's in the back.
And Mary Dale will be up here in a little while talking about SBA loans. So David Zekink will talk about the foreign trade zone.
Well, thank you very much, Naomi. I really appreciate it. I just want to welcome you all here personally. My name is David Zekink. I'm the administrator here at the Hawaii Foreign Trade Zone. We've been in business for about 50 years now, so we've been a stalwart supporter of import-export within the state. And really our mission is to help get import-export done. That's why we built this end of our facility, the International Trade Resource Center. It's to get people connected with those resources. They're going to help them do import-export and be successful at it. We are part of DBED, and we work very closely with the SBA, with the Hawaii Pacific Export Council, and many other organizations to do that for you. At our facility, we have customs people, logistics people, shipping agents, customs brokers, all sorts of individuals that can help you do your business. We have more information about it. I'm not going to spend too much time, but more information in the back. So if you're interested, go ahead and pick up one of our flyers. And we've got numbers and whatnot listed on there, so give us a call. Again, I want to welcome you here and thank you, and hope this is a very meaningful program for you today. Thank you.
Thanks, David. Okay, so if we can take a real quick round robin talking about well, give us your name, your company, what you'd like to learn here. So, want to start?
I'm Jamie. I have a women's wetsuit company, Siren Song Wetsuits, and I'm interested in some of the insurance as far as when I have export, people don't necessarily want to pay up front, so I'm interested in insurance. I'm also interested in just general financing to buy inventory and whatnot. So.
Thank you.
My name is Gina Tai, and I'm the designer and owner of Angels Magazine. I was started as the designer, and I design clothing for my store in Hawaii only, and it's in Waikiki. But however, the business is growing really fast, and also I'm in Waikiki, which is a lot of tourists from different countries come and buy and from my store, and they resell it in their country. And after a while, I decided to do the wholesale and also export for international. I'm growing at the same time with my business, so there's a lot of questions I go through related to the finance. So I think this is one of the class, probably only 1 or 2 hours, but gonna be helping a lot for the business. Special, I wrote down all my questions. There've been years. I have so many confusing and also so many learning experience from my business. So just same like me and everybody here, if we are start from small, and if our business grow, we do need to have the knowledge about the finance, which is one of really important for us. So I just want to share with everyone.
Thank you.
That's why I'm here.
Thank you. We have a lot of information and a lot of resources for you.
Morning, everyone. My name is Travis. I started a company called Haven Apparel, and it is a sustainable athleisure wear company. We do shirts made out of hemp, bamboo, recycled water bottles, and organic cotton. I'm here because I'm interested in learning about an overview of export. Thinking about entering the Japan market, becoming export ready in 2017, and exporting out to Japan next year.
Thank you.
Hi, good, excuse me. Hi, good morning. My name is Aaron Higa. I invented a new type of travel pillow I have 2 patents for it. And just real quickly, the way it works is it's just a pillow with a sling, and what it does is your arm's weight pulls the pillow toward your head, so it keeps it taut all the time. And I want to export it. It's a global product, so I want to export it around the world to Europe, Japan, Australia. And for the seminar, I want to learn the troubles that I might encounter. I want to learn how to attend international trade shows, that sort of thing. So I just want general knowledge from this seminar, hopefully.
You're in the right place. And you had an article in Midweek just recently.
Yeah.
So there was a steering wheel cover that you put on.
Steering wheel
and got this
cover,
idea.
I learned, so I had the steering wheel cover over my shoulder, I shoved my arms in, and that's how I invented it, yeah. So. I was on the KTV4 morning show as well, pitching my early marketing. Yeah. So we launch in July.
Thank you. Back here.
Hi, my name is George Lovely. Currently, I'm a realtor with Better Homes and Gardens. Formerly, I was an investment banker 20 plus years in Tokyo, Japan. And I traveled all over Asia as an investment banker. I just wanted to leverage my background to get into export and import business. So I'm here to start.
Thank you.
My name is Dylan Butterbaugh. I started Manoa Chocolate about 7 years ago, and we're at a point where we're starting to export to Europe and Japan, and I enjoy learning about the different resources that are out there. They've been really helpful so far, and there's so much more to learn. So also financing for inventory and things like that. Yeah, different shows that make sense going to for our product.
Thank you. Okay, we have some bankers here. So this is Dennis Wong and, from Tori from Hawaii National, Russell Liu from First Hawaiian Bank, and then we have some other bankers coming in. Betty Brow is our vice chair for the Hawaii Pacific Export Council. She was in charge of the international division at Bank of Hawaii, so she has a lot of experience there. And then Mary Dale, we'll hear from her later. So we'll start with methods of payments real quick with Dennis Wong.
Good morning. I'm Dennis Wong from Hawaii National Bank. Welcome. Thank you very much for taking the time and coming here. First of all, I'd like to thank the Hawaii Pacific Expo Council and the SBA. It's a really good group of people that I've known for a long time. They're quality, they put their hearts into it. They're easy people to approach. So welcome. My end of the presentation has to deal with payments, and basically it's from one point of view. It's from you as a seller or exporter. So when you look at it, first of all, how do you determine your cost of your product or services or combination of both? Well, the one thing is you look at your cost and, the materials, labor, everything that goes into producing your product, along with your packaging, you're looking at shipping costs. You mentioned that. And as far as you're looking at marketing, and there might be even some small charges to deal with letters of credit if you ever deal with that. But essentially, right over here, these are essential components to derive what your cost is. And so the goal is, what we want to do is to produce a profit, so the accuracy of your costs, and then you look at it resulting in gross profit margin. That's the basis of where you start. If I can go to the next slide, please. Now, Now, there's several options that you have as a seller in accepting payments. One can be low risk, one can be high risk. Let me discuss from the beginning, well, essentially what a low risk is: payment up front. That's the most desirable, but it may not be achievable. Now, forms of payment up front can be credit cards that you accept, or basically wire transfers. But let me get more into areas that, the high risk too, as far as you extend them goods on consignment, or basically you give them credit terms, where what's involved is that your shipping, your goods are basically sent to whatever country or whatever distributor or seller of that country, or basically the buyer, and then you send it up front, and then whatever terms you agree on, they pay you, 30 days, 60 days, whatever your negotiations are. Now, the problem with that is everything is up front, your cost, and even shipping or insurance. So you have all that out, and if they don't pay you, there's a loss. Now, there's kind of like an in-between ground that we talk about letters of credit, which I'll go into more detail. But let me just skim on that right now. Letters of credit is you're dealing with a buyer, and then you're dealing with a seller. Now, normally what it does is the buyer's bank initiates a letter of credit in their behalf. So they go to their bank, and through their credit, what they are able to arrange with their banker, they have a letter of credit. And that letter of credit is basically issued to the seller, which you are the beneficiary. So how that is kind of like a third party or compromise, because the bank is issuing the letter of credit and stands behind its letter of credit in behalf of the buyer. So the seller is required to provide certain terms and conditions, documentation, so that when you're providing these documentation, like some of the documentations might be like, you would have like a commercial invoice which describes the goods that you're selling, okay? Then you have a packing list to show what is actually included in that shipment, certificate of origin, where it was manufactured, produced. Then you have bill of ladings, or you have airway bills, whether it's going by ship, freight, or by plane. So what that letter of credit is in a sense that because it's the paperwork flows through a bank, the seller is basically guaranteed, as long as they execute according to the terms and conditions of the letter of credit that is the buyer provides to the seller. When I mean terms of conditions is all the goods are there and is done exactly to the terms of what the letter of credit is done in the timing of the letter of credit, then they're going to be paid. From a buyer's standpoint, it's sort of like, they're assured that if all the documents come to them, they're able to get the goods, and they're able to get a customs broker, or if they're experienced, they can do it themselves, and they can get the goods off of the boat. So a letter of credit is sort of like a third-party type of transaction that protects the buyer and seller, and a bank is involved. And again, to repeat that the buyer goes to his or her bank for that letter of credit. Okay. Now, as far as there is, this part is basically what more is in detail of the letter of credit. Like what you want to do is, Now, how the beneficiary is to be paid, okay? Now, in there, there's various acronyms or different meanings of a letter of credit that you can negotiate, like cost insurance freight. That means that there's one party that is going to pay for the cost insurance and freight. So that would be normally the seller. And if that's negotiated, then if you are the seller and you're going to have to pay for the cost insurance and freight, you have to put that into that factoring of your costs. Now, there's other things like you have free on board where you may get to a certain point where the seller is responsible to get the goods onto, let's say if it's on a shipping, onto the dock, and then from there or onto the boat. Once it's on the boat, then the buyer takes responsibility for the insurance and the other costs going from the boat from the standpoint all the way to where the destination where the goods are delivered. So, and there's X factory too, and I'm just giving you a few examples because of time where the negotiation and terms that you use is very critical and important. Because X factory could mean that the seller is just responsible just to put the freight of goods on his front door. That's it. Then you're obligated to pay as a buyer. So it has to be worked out where how is the goods to get from the manufacturer's or the seller's door all the way up to point of destination. So there's certain terms of the letter of credit that you have to negotiate, and there's certain parties that bears the cost of those terms, whether it might be the seller or buyer. And that's what they're talking about. How beneficiary will be paid, the time and place of delivery and method of shipment. And method of shipment can be like by freight, you might be train or cargo or truck, or you might have by vessel or by boat overseas, or by airway bills, which is by airlines or planes. Now, the required documents that I kind of surfed on is basically you have general things like a commercial invoice. You have to describe a full description of what you're selling. Then you might have a certificate of origin if you're dealing with a foreign country. Then you have a packing list. Then you also have, like, you're going to need like the bill of ladings or the airway bills. And that's basically, that document is those documents enables you to get the boat goods out of customs or off of the boat or off of the plane. Yeah. And so transshipments or partial shipments, in other words, transshipments means that sometimes you might need multiple ways to get it. Like say from the factory, it might have to be, there's not a port nearby, so they might have to truck it to the port. Then from the port, it goes from boats to the destination. So there's more than one form of transportation. Now, partial shipments is, do you want the shipments to come all at once, or will you allow the seller to ship in multiple shipments? And that's what it means. And if I can head towards the last slide. Okay, a couple of things. I just have just 1 minute to spend. That you have various type of revolving letters of credit. Okay. I'm sorry. You have basically several types of letters of credit. One is a commercial invoice, which you basically are selling goods of what I spoke mainly about. So once the goods are delivered, once the documents are delivered to the buyer's bank, then you can negotiate payment on that. But there's another one called standby letter of credit, and that's basically for a service that you were to do. And like say if you're performing some kind of service work, contracting work, then it may not involve goods, then you might have some other type of guarantee that is performance related. So one is mainly tangible hard goods predominantly. That would be a commercial letter of credit. The other one would be more service oriented, which is a standby letter of credit. And I think I've covered basically everything. Yeah, thank you very much. Okay.
Thank you. Thanks, Dennis. So there are a lot of different ways to get paid, and letters of credit used to be really popular. We used to have a big department. Yeah, even the first one, you had a big department that did letters of credit, and all the officers have to write it up. But nowadays, there's so many other electronic ways. So just be sure that when you set up your methods of payment, you're telling your buyer, this is how I want to get paid, because you do want to get paid, right? So you need to make sure that it's the right way. For instance, if you do it by credit card, just know that 2 months later, that person may dispute your credit card and you get a reversal in your account. They ask the bank to reverse that charge. If you go by letters of credit, it's maybe it's saying that your buyer has the wherewithal. Because if you go to a bank, you want to buy something and you go to the bank to get a letter of credit, most times you got to put cash on deposit, right, Russell, in order to get approved? So that means you have to put the money in the bank so that they can issue the letter of credit. So it's a check and balances, but when you buy things, it's not necessarily the quality of what you're getting. That's the letter of credit doesn't guarantee the quality of what you're getting. So what you need to do, if you do want to do a letter of credit, you want to be paid by letter of credit, go find a banker who knows how to do it and ask them to help you with that. Because as Dennis said, there's a lot of terms and conditions. You want to make sure that you're going to set it up correctly so you don't have any issues. So sometimes the buyer will dictate what the terms are, and it's something that you've got to live with too. So it's a good thing to talk to each other about what the terms are. Okay, so we're going to be talking about the financing options now. So now you figured out how to ship, you priced it, you got a buyer, and you are going to give terms maybe, and now you've got to buy your equipment or your inventory or whatever you need to do, expand, get more employees, so you need some financing. So I'm going to talk about some options on financing. Okay, so when you have a need for financing, the cycle is, and we're going to go to the financing options. Okay, you have working capital. So you're going to find what your need on, because when you go to the bank, you can't say, well, here's my financial statements or here's my business plan. How much can I borrow? It doesn't work like that. So you need to come in with a plan and let the bank know how much you need. And the way that you can figure out how much you need, you have cash, you're going to buy inventory, or you need a loan, you buy inventory, you sell the inventory. Okay, so now you have the sale. Okay, so, and then you have the sale to the receivable if you're giving terms. And then finally the receivable to the cash. So this is the kind of cycle. But now you can see that the gaps are there where you might need to finance the purchase of the inventory before you convert that to cash to buy more inventory. Okay, or you sold it, but you're giving terms. You need the cash to buy more inventory, so you have money stuck in receivables. So when you find how much money you need to keep this cycle going, so you can get cash to buy more inventory, to make more sales, then you kind of can figure out how much you need to borrow. Okay. So where is the money? You can take it from your own pocket, go to the bank and borrow it yourself on a consumer level if you don't go for a business loan, or you can get the vendor to finance some of these things. So the vendor, if you're buying inventory, equipment, they may be willing to give you terms. Pay me in 6 months, equal installments, or 1 year. Or they may say, I'll give you 2 months, no need to pay me for 2 months until you get your sales up, and then you get your cash to pay me. So sometimes the vendor will be willing to work with you because he wants your business too. Okay? Then you can go with this consignment barter or the customer's prepaying. Those are conditions, terms that you need to work out. So customers prepaying, that's the easiest way because now you know you got your money, but that's not very competitive because the customer, your customer, now has money in your hand and he's out of that cash to get his business going. There are grants, angel investors, crowdfunding. These are all some different ways to raise money. But usually people will borrow money. So you can borrow from a relative. So say your auntie has a CD at the bank, and how much is the bank paying now? 0.05 interest a year. And so you say, Auntie, can I borrow that? And I'll pay you 2%. Make sure you pay it back, though. You might have investors. Sometimes when you have a military group and you got your people in your troop that would be willing to give you $2,000, $3,000, you've got investors, and maybe they want it back. Maybe they'll give you money as a gift. So that's a way to get some money into your company. Charge cards is a very popular way to start your company because you get all of those solicitations in the mail. And it's easy. You just sign your name, send it in, and you get a charge card. You use it. Just be careful about the terms. So sometimes you miss a payment, you're a little late, and the interest rate goes up to 24% or some ridiculous amount. Okay, so when you have a lot of charge card debt, though, your credit score may drop, which may mean that when you go to the bank to try and refinance all of this, you might not be able to get a loan. So charge cards, be very careful when you're trying to start your company with charge cards. Once you got your system going, though, charge cards are really good to use because you charge something, you don't have to pay until the due date, so you've got like 30 days of free use of that money, right? And most times you get points. So as long as you pay it in full, that might be a good way to finance your working capital. Sometimes your life insurance has a cash value that you can borrow against, and sometimes you don't have to pay it back. Retirement plans, but normally you go and get a loan from the bank. Okay, so we'll talk about loans. So how to get a loan, you go down to the bank and they're going to ask you a lot of questions. Unless it's one that they just go by your credit score, then it's simple. But they want to know what the purpose of the loan is, because we need to know what the purpose is because the government doesn't want us to finance terrorists. So we need the purpose. It needs to be a business purpose for a business loan. Okay, we want to know how much you want to borrow, the term, and how you're going to pay it back. Is it manageable? Is there collateral? Are there guarantors? Okay, so these are some of the questions that the banker is going to need to know. So the type of financing, you only have loans and lines of credit. So those are the only two that you can have. But they can be in different forms. And I have a PowerPoint, and we're going to be sending out the PowerPoint, Rob. So if you want a copy, we'll send out the copy of this PowerPoint. When you have a loan, it's a certain amount of time. It's a lump sum. So you get all of it, you use it, and you make your monthly payments, right? So it's good because you know how much your payment is, and you know that you've already got that money. So a loan is great to finance your company at the beginning and to take care of your startup of your company. The disadvantage, though, it doesn't revolve. So if you needed to use it like a charge card, you can't borrow and pay back. So that's what a line of credit is for. Okay, and the monthly payment might be a little higher because it's a steady principal and interest payment. Okay, so when you have a line of credit, it's flexible because it's revolving. You borrow, you pay back, you buy inventory, you collect, and you pay it back. You buy a seasonal, you want a big shipment or build up for Christmas, you borrow from the line of credit. But you need to pay it back so you can use it again. Normally, it's interest only, but sometimes there's a little bit of principal and then interest. You be very careful because if you borrow, say your line is $100,000, and you borrow $100,000, you don't pay it back because you think, why bother? I'm going to borrow it back again. So what happens is the whole year it's at that amount, $100,000 the whole time. Your banker might say, hey, that should have been a term loan, not a line of credit. So you may convert that to a line of credit. Also, every year you may need to requalify. So the line of credit was based on information at one point. So say this next year, you have financial statements that are a little weak, your credit score maybe is a little weak. The bank may say, hey, sorry, but your picture is different now, so we may need to term this out. Or sometimes they'll say, you need to pay us back. So the disadvantage on a line of credit is you may need to renew it. There may be annual fees, but there are a lot of other offsetting factors that it does revolve. Okay. So say you went to the bank and you're not able to get a regular loan because you're a startup or you're doing something new, you don't have history, there's some reason why you're not able to get a regular loan. This is where the bank can call in SBA and get a guarantee. So the bank will say, we'll go to the SBA and say, we have this loan, the prospects are good, the financials look promising, the business plan looks promising. And SBA, would you guarantee the loan for the bank? So if the bank does, if the loan does go bad, we can call in our guarantee from SBA. So SBA has these export programs because they want exporting. They're going to encourage exporting. And Mary Dale is going to be talking about the specifics of the SBA loans.
So we have these three programs for exporters. We have other loan programs, but this is specifically for exporting. The Export Express, the Export Working Capital, and our international trade loan. So you just go to the next one. So for these, you have to be a small business. That's the one thing, to determine that. If you're not sure if you're a small business, we can help you figure that out. And usually it's based on either revenue or the number of employees, depending on what your industry is. So if you're in business for 1 year and you don't necessarily have to have exported, but you've been in business for 1 year, you can possibly qualify for this program. They're also going to test your credit worthiness. So Naomi had mentioned, about the credit score. We are going to look at that because the criteria for the bank, before they can use an SBA guarantee, you're going to still have to meet the bank's criteria. So to make sure that your business is credit worthy. So when you're running up those credit cards, you want to make sure you're making those payments back so your credit score is not falling. The proceeds could be from anything from buying equipment, you need inventory for the business, or you need to, make some changes in your website possibly. I don't know which one this is on. I think this is, she says the employees, that's for a wholesaler. So this, I think she's looking at the, what was the first one? Export Express? We're looking at? So we can go to the next one. So, yeah. So okay, so Export Express, you can use both. The term loan that Naomi mentioned, if you get you all the money up front, you make a monthly payment, or for lines of credit. For a line of credit, 70% of the business has to be doing export. So when you're looking at your business, you're selling online, you're selling in your stores, where is the product going if it's going overseas? And I always have to emphasize that it has to be to another country. It can't be to Kauai. It can't be to California. Because sometimes the state of Hawaii will say, oh, that's an export. For SBA, it definitely is not. It has to be to a foreign country. The other thing we have is for export development. So say, for instance, you're going to start exporting, but you want to, start getting out in front. You want to attend some of the trade shows we mentioned earlier, Jamie was talking about. Or you want to change your website into the language of that particular country that you want to do business with. Or you want to, translate some of the material you have into that language. You can do all those with the funds for export. So it doesn't necessarily based on a transaction that you have overseas at this time. This is like kind of the preparation for it, the business development portion of it. So you say you're getting ready, if you have the bikinis in your store and you want to start getting them into a different country and you need to start making those changes online, you can use the funds for that. Thank you. Thank you, Robert. You're so kind. Up to $500,000 is this loan program for Export Express. Now, if you don't need $500,000, because most small businesses are not going to need that large of a loan, you can get a loan up to $150,000, and the normal guarantee fee that we normally charge, we don't charge at that stage. If it goes over that $150,000, then we would have to charge that guarantee, and you'll see the fees that are listed here. But they are all based on, we like to throw it in credit worthy. Thank you for always throwing credit worthiness in there. But this is for our export working capital. And our export working capital loan is a little different from the Export Express. Now, these are based on an actual transaction. So if you're trying to ship something to Canada, and those bikinis that you're trying to sell to them, it has to be on an actual transaction that you have already set up. And this can come into, take the place of an export, as Dennis was mentioning, a letter of credit, so it'll make you more viable in that market, that you can have more competition. I know somebody mentioned earlier, and they're probably going to talk about it, I'm probably stepping on somebody's presentation, so I apologize, but the credit insurance, that there is Ex-Im Bank, whoever's covering that, probably Joseph, sorry Joseph, whoever you are. Oh, he's going to be online. Sorry, Joseph. Oh, David. I apologize now. That will be a program that will be suitable for you. So he'll get into that, so I don't want to talk about it. Okay, so for the export working capital is more transactional based. The export express is more for business development for it. Next one. And then you have what are ineligible. So, and David's going to cover that as well. They have what they call a country limitation schedule, and that schedule is going to tell you which countries that we cannot do business with. So for the banks to be, in order to do business with, to finance those deals, they have to check that country limitation schedule to see if those businesses are eligible, those countries are eligible to do business in. So sometimes it's in only the private sector, sometimes it's only the public sector, or sometimes we can't do business in those countries at all. So you should know about that, because those countries we are not going to be able to finance. And you probably know what some of them are, but they'll be on the list, and he'll cover that. If you're packaging a loan, those are some deals that we won't finance. So everything that's on here, if it's engaged in gambling, illegal business, any of those, I'm not going to even mention some of the others that you read, that we will not do financing for. So if you fit any of those categories, unfortunately, that's something we could not do. So one of the process is SBA loans, we don't write you out a check. You don't come to SBA and Mary write you a check, because you'll be really in trouble then, because I don't have the money. But the banks do. And so we have a guarantee program with that. And what that means, it doesn't mean we guarantee that the bank is going to give you a loan, because we don't. You have to meet the criteria for that. But what it means is you're going to select the bank your bank of your choice that does SBA lending, and they're going to determine if they need to bring SBA in to the transaction. So say you're doing a deal, you're a fairly new company, and they're saying the business plan looks good, you're a new company, that makes them a little more risky, or the market that you're in. So that's when they're going to ask SBA for that guarantee. And what that guarantee does, it limits some of their risks. So if there's a default, you don't pay back the loan, the SBA is going to they're going to fund that bank back a certain percentage. And with the Export Express loan and the other export loans, there's a 90% guarantee. So their risk is minimal, so it makes them more willing to loan to small businesses like yourself. So these are the different documents that you're going to have if you're looking to finance that deal. So you have the bankers that are over here with Hawaii National, Russell's with First Hawaiian, Naomi is, even though she's with HPEC, she's with Bank of Hawaii, and so on and so forth. So you go to those banks, you're going to need to submit those documents. So some of these documents that are going to be here that they're asking for, also there are some SBA forms that you're going to need. So the purpose of the loan, you're going to do this? Or you want? Okay, I'll cover this and then I'll sit down. So the purpose of the loan, you need to be able to go to the bank and tell them what you need the money for. So if it's for inventory, it's for, working capital, whatever the purpose is, you need to be able to state that and how those funds are going to be utilized. The other is how much you need. Never tell a lender, if they ask you how much you need, how much can I get? That's the wrong answer, because you haven't done your homework if you're saying things like that. You need to be able to explain what the use of the proceeds are for. Dennis is going, yes, Mary, tell them the truth. And any collateral. And this is, the collateral, it depends on the dollar amount that you're looking for the loan. So sometimes, depending on the dollar amount, they might not ask for collateral, but if it's over a certain dollar amount, SBA is going to ask them to ask for that collateral. So it could be your home, it could be a blanket lien on the inventory that you're looking at. Also, guarantors. If you are personally, because a lot of times people think, oh, I'm an LLC or I'm a corporation, I don't have to guarantee this loan. Yes, you do. You have to personally guarantee the loan, and anybody, any partner in the business that owns 20% or more is also going to be liable for that. So just remember that. If you have a partner in the business and they own over that 20%, they're going to have to put their name on a dotted line to say, I'm willing to pay back this loan as well. So you got to make sure your partner is in agreement with this process, this loan process. If you have questions later on, I guess they let me stick around. I'm not sure if they throw me out afterwards. I'm only across the street if they do. I have some business cards for you. I'm gonna zoom in on that, no, just kidding. So you wanna get those, I gave out some handouts, and you can always, sit down and talk to me, and we can go into details a little bit about your specifics if you're, too shy to ask questions today, and I guess it's at the end anyway. So I'm gonna leave, because I don't like him to put that camera on me anyway, because I think I'm secretly in the witness protection program. So I wanna thank you guys for your time. So, thank you.
Thank you for entertaining us, Mary Dale, as usual. Okay, so the process on getting a loan is kind of the same for any kind of loan. Any bank is going to ask you almost the same questions, and the process may differ, so you need to find that banker that's going to help you and find out what kind of documents you need to submit to them and how the process is going to take. Sometimes it's going to take just an hour, 2 hours. Sometimes it's going to take 2 months. It just depends on your transaction and how much information you can get them. So if you see a counselor to help you with your business plan or your presentation, that might help you, because when you go to the bank, you might have that one shot to make a really good impression that your business plan or your proposal is going to work. Okay, so that's why we brought the real life bankers here, so you can go talk to them and see, okay, what should I do? So the loan decision, when you submit the package, and we'll go into putting a package together later on, but the decision is going to be made on the structure of your loan. So how can the bank structure your loan? So the structure would be, how long it's going to be, the dollar amount, what it's going to be used for. We want to structure it so that it's kind of working with your cash flow projections. Okay, so if you're starting a store and for the first 3 months you might not have that income, the sales to make those payments, you may ask for a term loan with maybe 2 or 3 months of interest-only payments, and then start on the second or third month with the principal and interest. So the structuring of the loan is important to you so that you can make sure that you've got cash flow to make your payments for payroll and other things. Okay, so they're going to be looking at your credit score. All the banks will pull your credit report. Okay, so it's very important that you look at your credit report before you go and apply. So if you apply at several different places and they're all pulling your credit report, that may hurt your score because it's a pull each time. So you want to take a look at your score, go talk to, maybe interview the banks, find out which one you want to work with, and then apply. And then that one bank will pull your credit report. So there are 3 companies, 3 bureaus. So who has looked at your credit report? No? Okay, there are 3 bureaus, credit bureaus that you can use, and they need to send you a report once a year free. Okay, so you don't need to pay to get your report. But if you want your score, then there may be a payment. So just get one from one company, Experian, maybe wait 4 months and get it from Equifax, wait another 4 months. So every 4 months you get a new report from one of the other companies. And they may differ a little because it depends on who's reporting it. They may not report to all 3. They're supposed to, but sometimes it doesn't happen. But sometimes you'll find something on your report that is not yours. And it's because maybe your name sounds like something and they just put it on your report, or they think it's you, so they'll put it on your report. So you may find a collection or a charge off or a lien that's not yours. You want to make sure that you review your report and it's yours, is clean. And you might want to do some extra things to make it look good. So when the banker pulls it up, it's going to look good for you because the score is meaningful to the bank. It tells us a little bit about your character, how you've paid your bills, how you've handled your credit in the past. Okay, so the credit report is important. The projections are important. So when you go for an SBA loan, for instance, you may need to show them that you're doing export transactions, or you have the cash flow. So projections should be realistic because they're going to ask you, well, how did you come up with these numbers? Okay. If you have cash reserves, if you have contingency plan, these are all some of the things that they're going to be asking you that you may want to put in your business plan already so that it's there for them to just review. So the quicker they can understand what you're doing and what your request is, the quicker they can, get to the loan decision. Okay, so some of the decisions, we have this thing called a 5 Cs, and it's character, which is your credit score. the capacity to repay, so that's your cash flow, because we need to show that you're able to repay the loan. Your capital, that's your skin in the game. So if you want to get 100% financing, you might not get that from the bank. Most likely, you're not going to get it from the bank. So skin in the game, what you've contributed to the company, what kind of collateral, and what are the conditions. So the type of industry, the type of product. So if you're selling typewriter parts, we may say, well, sorry, we're not going to finance that because it's obsolete. You know, typewriters are obsolete. The economy, external factors, those are all the factors that we look at. Okay, so say you went to the bank, you asked your relatives, you still can't get any funding. Crowdfunding has been growing. There are about 400 or 500 of these internet companies that will do these crowdfunding transactions. So these are some of the popular crowdfunding sites where you put your project up. So I'm starting a company, I'm exporting to whatever, I'm going to support these villages in Thailand. Whatever your project is, people around the world can say, I like that, I want to contribute to that project. And so they give you money. So it could be they give you money, but there's a catch. You pay them a certain percentage of your company, or you pay them a certain interest rate, or it could be a straight all out, I'll give you this, you don't have to pay me back. Or I'll give you this amount, you send me back a picture or name me on your website. There was a guy who did maps in Hawaii. And so he asked for $25, and he sent them a map, and the map cost him $3. He didn't have to pay them back. So he got all of these people to give $25. There was a shave ice store in Aina that did a crowdfunding deal for $50,000. He got $50,000 through crowdfunding, and he pays them back monthly through this website. So just to remember that these websites, some of them are not legitimate, so you've got to do your homework. We're not endorsing any of these. And you need to see what the terms are, because sometimes they're really expensive. The website, that company may take 10% of the proceeds and then give you the 90%. So just check them out.
That shave ice place, though. That's good shave ice.
Yes, that shave ice. Uncle Clay's. Because there was a big write-up, it's not a secret, so he did talk about his crowdfunding adventure. And there are companies that they get $700,000 or $2 million. It just depends on, you know, how you write it up. It's a lot of work, but, you know, sometimes that's the only way you can get something that is a brand new concept going. Have you tried crowdfunding for your?
I did it.
And how'd it go?
Great. I got like 22,000. Just got started back in 2014, I think.
Wow. So is it a loan or is it an outright gift?
I did Indiegogo, and it was mostly people bought. It was like a pre-order of product.
So that's good. They're pre-ordering, so it's a sale. Sometimes, though, it could be a concept. So you have a concept. When I get this up and running, I'll get it manufactured. Then I'll send you the product, your sling, your pillow, when it's going. And so they wait a little while longer for their goods, but it's not a loan. You just send them the product. Okay, so some other ways to speed up your cash flow: you can reduce your inventory if you've got a store already. You can bargain with the vendors, get deals, speed up your collections, sell assets. These are some methods of bootstrapping. You know, try to do it internally. Okay, and then some words of advice. You've got to really watch your numbers. So if you're not an accountant, you don't know how to do financial statements, you need to find someone that can help you, or go to a counselor who can read your financial statements. But you need to have your financial statements periodically so you know where you are. Because you don't want to go to the end of the year, get your tax return, and find out you lost money because you didn't price something correctly. And pricing things, you've got to always adjust. There was a company that had gold in their product. And of course, gold prices were going up. The person who was pricing and invoicing the customers kept the same price, the same invoicing process, and they weren't increasing the value of the product. And guess what? They went out of business because the price of gold was going up, and they were just still charging their customers the same amount. So you've got to watch your numbers. You've got to see every point of your company. Are you paying a fair price? Are you paying a fair price for your insurance, your goods, your lease? Look at every point, every transaction, every line item on your financial statement. Okay, pay your taxes on time, because if there's a lien or garnishment, the bank might cut you off and say, you know, we're not able to loan you any more money. Have a succession plan, because maybe you want to go on and invent something new, so you want to structure a company maybe for selling to an investor. There was that lady who had the baby sling, and she sold it for millions, yeah, her company. Okay, so those are some words of advice. Keep your banker informed.
We have a caller, David Josephson is calling in from Irvine, California. He's with the Export-Import Bank of the United States, generously giving us his time and expertise. One issue we have is that he's calling in on the speakerphone. David, can you hear me?
Okay, well, good morning, everyone. I'm David Josephson. Probably the most important slide is the first one that shows my name and telephone number and email, because I and my colleagues spend 80% minimum of our time speaking with exporters who do call in at various stages of their exporting business. And as you'll see, as we go through, you know, at what stage we can actually take action, and that will show. But we absolutely love talking about export transactions, untangling them, and finding what are the risks and what solutions we might have or other government agencies might have in those export transactions. So I encourage everyone, since you have an export transaction, give us a call. And then I hope to, if Naomi Masuno is there, I hope to get a copy of the sign-up, the people who physically came to the presentation, so that I can follow up individually with you and establish contact.
Sure.
So we can go to the next slide, Rob.
Okay.
So small businesses who export in the USA use export credit insurance from the Ex-Im Bank more than any other product that we do or that we have. And this is basically it. It's for foreign accounts receivables only. So if you're Hawaii-based and you ship goods to Japan and you have a foreign account, you have an account receivable on a Japanese company, that qualifies. If you ship to the mainland, that doesn't qualify. That's an inter-USA commerce. What the credit insurance does is protect the exporter if, when they do have those receivables, that is, the buyer has said they're not going to send cash in advance of shipment, and they can, they'll pay in 60 days or 30 days or 90 days, just like U.S. customers of the exporter would do. And it also, we believe, and we've actually seen it, that if you are offering credit to your foreign buyers, you're more competitive with their suppliers from other countries, and it does allow you to grow your sales, and also allows you to leverage bank credit, because lenders who look at your accounts receivable and they see the foreign accounts receivable, and they say, what about these? And if you say, well, they're insured with the U.S. government, that provides a lot of comfort and to a banker who might be able to finance your export business. On the next slide are the qualifications: 3 years in business, a year of exporting experience already, and a DUNS number. And there's also a link there for you to get a DUNS number if you don't have one. And so a lot of companies are disappointed that we don't do startups, that we don't insure a startup who hasn't even exported yet, but maybe is going to within the next year. So the reason that we don't do that is it's just pure efficiency economics, that we're a federal agency. We can't hire additional people if business gets, the volume grows. So we want to make sure that the business that comes in and that we spend time looking at and evaluating and ensuring is business that is actually going to happen. Because if it doesn't happen, then we're going to be, spending time there when other exporters who really are exporting don't get our time. But of course, there's always an exception. There's always a way to make a case. And if you have been on a foreign trip and you have an international sales plan and you really have signed a distributor or two in other countries and you're ready within maybe 60 days to ship goods to those distributors, then I'm going to advocate from my perch here in Irvine, California, that you do get a credit insurance policy from us, and so we can talk that over. Let's see, on the next slide are the costs of the insurance. And if you get our small business policy, it's less than 1% for every invoice that you insure. It's actually 65 basis points. And if you only export occasionally, and therefore you maybe just buy a single buyer, single country policy, right, that's going to depend on the country and the term. So you'll pay more to insure a shipment to Kazakhstan than you will to Mexico, just because there's more perceived risk in Kazakhstan, maybe through lack of knowledge, than there is in Mexico. And you'll pay more if you grant 180-day terms and you want the government to insure that than if you grant 60-day terms. So that's how that works. Letter of credit insurance, really, I just talk with bankers about that, but if you're getting a letter of credit and it's coming from a foreign bank and you take it to your bank in Hawaii and they won't confirm it, please do call me, because we can get them an insurance policy that will insure their confirmation for 95%. And if it's a government bank, public sector bank in the country of the buyer, we'll insure it for 100%. On the next page, we talk about how the insurance policy that you own from XM Bank can be assigned to a lender. So if you have granted 90-day terms to a foreign buyer and we've insured it and you're feeling pretty comfortable that you have 95% cover from the export-import bank on that amount that's due, but you don't really want to wait 90 days, you can take this insurance policy and assign it to a lender. And there's a process for that too. The commercial banks that I've spoken with in Hawaii don't seem to be doing that. So when you get a situation like that, please do call me, because I can help walk them through how to make that assignment and then get you funded when you export. And on the next one, we're talking about the working capital guarantee for the exporter. Now that's going into the pre-export period. In other words, when you assign your insurance of your receivables and you get funded at export, that's one point in time. But if you have an ongoing export business and it's growing, and you find yourself having to invest more of your company's capital in raw materials, spare parts, or not spare parts for your machinery or things, but I'm talking about components and things that go into something you might be building and sending out on export, and labor and things like that. If that's your situation, you can go to your bank and request a working capital line of credit for exports, and then ask them to get the XM Bank to guarantee it. And we work with delegated authority lenders. We don't have any in Hawaii right now. We did have one, but they actually used the program for 2 years. And currently we don't have any, but we are always willing to get them started in the program if they want to do that. And so again, all the business, it originates at the exporter, so give us a call when you have a transaction that, or you have a business that you'd like to be financing, and you want to go to your bankers and get a working capital line of credit guaranteed by the XM Bank. Some of you may know that the SBA also does so, and they're more active in the islands than we are, and I think they even have an office there within OI, Office of International Trade Representative, who can set up a guarantee from the SBA for exporting companies. In the next slide, this is what it takes. This is what our working capital guarantee is. And it's a 9% guarantee. And the fee of 1.75%, that looks pretty steep compared to the fee for an SBA guarantee for exporters for what they call the Export Working Capital Pro EWCP. Their fee is 25 basis points, 0.25%. However, they also have a 52 basis point, I think, but let's just make it a 0.5% loan administration fee that isn't charged to the exporter. It's actually charged to the lender by the SBA. But we don't know, but we surmise that maybe the lender does pass that fee forward to the exporter. So if we assume that he does, then the exporter will be paying a 25 basis point guarantee fee plus the 50 basis point, which is 0.75% cost of fees, in getting an SBA guarantee. And so if you look at the 1.75% of Ex-Im Bank, you still say to yourself, well, why would I ever go to Ex-Im Bank if their fee is a full percentage point higher? But you have to look further into that 1.75% because the amount that Ex-Im Bank actually receives from that fee is 50 basis points when your loan is from a delegated authority lender. So that means there's 125 basis points, 1.25%, that the bank is collecting from the exporter, but they're not forwarding it to Ex-Im Bank. So that means that you can negotiate. And I know banks I know exporters in California who do negotiate. And because especially if there's a competition between banks and the banker coming in to compete, will maybe waive some of that 1.25% fee, and I know banks have waived it all to make their fees competitive with other banks' fees. So anyway, that's just a little aside. The bankers don't like me to say that, but it is public knowledge. It's in our working capital manual, which is available on our website. So I can't really withhold it, especially when I'm trying to encourage exporters to use the working capital guarantee program of the Ex-Im Bank. On the next slide, we have the benefits to the exporter, but I think I've covered that. But I should mention that both Ex-Im Bank and SBA, if they're guaranteeing a line of credit for your export business and you have to issue a standby letter of credit as an advance payment guarantee because you've gotten a large down payment on the purchase order that you're exporting, and the buyer who sends the down payment wants a guarantee coming back to them that if you don't perform, they can call that guarantee. That guarantee gets issued as a standby letter of credit. If you don't have the guarantee of the federal government via SBA or Ex-Im on that line of credit, it's likely that your banker will issue that standby letter of credit, but will require 100% cash collateral. So if you get a $50,000 down payment and you have to issue a standby LC for that amount, and the banker requires cash collateral, now your $50,000 isn't being used in your business, it's being used to collateralize the standby letter of credit. So that's a little bit of an exercise for no purpose for you. But if you have the SBA or the Ex-Im Bank guarantee, the collateral requirement is not 100%, it's 25%. And I can't speak for the SBA, but it doesn't even need to be cash at Ex-Im. It could be existing accounts receivable in your business that go to satisfy that 25% collateralization of a standby LC. So we'll go to the next slide. Medium term is the one thing, and people do get confused because, and I don't blame them, because not only does Ex-Im provide export credit insurance, but so do about 15 private sector insurance companies. And not only does Ex-Im Bank offer a working capital line of credit guarantee for exporters, but the SBA offers like 3 three of them. You know, well, two for working capital, and one for long-term capital needs. And so that's confusing right there. But the one thing that you can't confuse that EXIM does that other banks don't do, that other government agencies or private sector agencies, private sector insurance companies don't do, is that we grant a medium-term guarantee on capital goods, capital equipment exports from the United States. So if you're making anything of a capital goods nature, capital equipment nature, and exporting it out to a buyer, he can get a 2-year, 3, 4, 5-year loan from a lender. We'll help you find the lender. The lender will get a 100% guarantee from the EXIM Bank on the loan, principal and interest due from this borrower in the other country, and the exporter will be paid cash when they ship either one-time or partial shipments, to that buyer. So that's a very cool product. It's really effective, and I do want to mention that since EXIM Bank does cover services exports as well as merchandise exports, here's an example. I haven't been in the islands in quite a few years, but let's say that there's a new company that has a great tropical smoothie business in the islands, and they've franchised across the islands, maybe to the mainland, and now they're going to franchise into Asia. That franchise is actually considered a capital, it's capital cost. So the franchise fee to the franchisee in the foreign country would be coverable at EXIM Bank in a so-called medium-term loan to that franchisee to buy the franchise off the Hawaii owner. And so that's medium-term, and I think that's the last slide. Here's some examples of companies that we have worked with over the last 3 or 4 years in the islands, and most of them are recipients of insurance policies from EXIM Bank rather than borrowers guaranteed by EXIM Bank. And once again, that's because we just really don't have a delegated authority lender. So you exporters in the audience, go pressure your bankers to get delegated authority from EXIM Bank, and we'll get them set up for that. So that's what I have, and I don't know if there's time for questions, but I'd sure be willing to hear them.
Anybody have questions for David Josephson of the EXIM Bank? There's David. There's one question.
How do you evaluate whether or not you are going to agree to insure the terms of say I have an invoice with a buyer in Europe? Is there like a guideline of what you will insure versus what you won't? Is it just, I don't know, does that make sense?
I couldn't understand the question.
Sorry, I was a bit far away from her. One more time she'll ask you.
I'm just wondering how you evaluate whether or not you will be willing to insure an invoice, or the terms and a buyer. If I have.
Oh, absolutely. Very, very reasonable question. It depends on the amount. If we're asked to insure an amount up to $100,000, we only need a credit report like a Dun & Bradstreet or a Veritas or one of the agencies that report on foreign buyer credit ratings. And so we just need a credit report for the $100,000. And if you own what's called an express insurance policy from EXIM Bank, that's for newer exporters, maybe because they have less than 10 buyers and they haven't really provided credit yet to those 10 buyers. If you have that express insurance policy, we will pay for the credit report that's required, for any amounts up to $100,000 that you want to ship to those buyers. So that's a very good advantage of that policy. And then if you have a regular small business multi-buyer policy, you have to pay for the credit reports, for amounts up to $100,000. between 100,000 and 300,000, we'll need the credit report and a trade reference from the buyer, meaning a reference to another company, could be in his own country or in another country or U.S., who provides him credit. And the trade reference needs to be only half the amount of what you're asking for. So if you want a $200,000 limit, and he can show us that he's been on credit and paid promptly with another creditor for $100,000, we're going to insure the $200,000 limit. Once you get to $300,000 or more, we will want to see financial statements on the buyer.
Does that answer your question?
Yeah, thank you.
Okay, thank you, David. Any other questions for David? Okay, David, there's no further questions right now, so I'm going to put you on mute, and then we'll proceed with the conversation. Thank you very much. Excellent presentation.
David has been with Exim Bank for years, and he knows his stuff. So you can just give him a call. Just remember, he's 3 hours ahead. So try and call him in the morning. Go to Exim.Gov for a lot of information on the credit insurance. It does only cover certain things. So you might want to check it out, but he is very accommodating on taking phone calls and answering those questions, if you have questions. For the banks, if you have credit insurance on your receivables, it means that the value of that receivable is a little bit better quality because it has that credit insurance on it. Okay, so we're gonna real quick with Winfred Cameron from American Savings Bank. He's gonna be talking about how to package a loan package when you take it to the bank. And just remember that every bank may have some little different ways to package, and so it could be kind of generic.
My name's Winfred Cameron. I'm a business relationship manager at American Savings Bank. What I'm going to go over was pretty much going to be the same whether you come to us, First Hawaiian Bank, Hawaii National, CPB, Bank of Hawaii. Again, generic. Going to talk about two groups, the borrower and the guarantor. The borrower will be the company, the exporter, whatever the company is. Guarantor is basically the owners of the company. For us, we look for guarantor for anyone with at least a 20% ownership in the company to provide their guarantee. So whether it's one person, 5 people, we'd like all of them. If they've got a 20% ownership, we're going to want them to be guarantors. Okay? And that guarantee, sometimes we get asked, how long do I have to provide the guarantee? As long as you got, at least our policy at the bank, if you've got debt with us, if your company has debt with us, we want your guarantee. And that's because the only time the guarantee will come into play is worst case scenario and there's a default. As the owners of the company, you have control over it. You should have confidence in the company. If you're concerned about having to provide your guarantee, then I'm going to be a little concerned as a lender, right? Because I'm lending you money. If you're confident, that gives me a lot more comfort in it. Okay. So let's go into that application packet itself. One thing I forgot to put in there is some banks, some financials will have an application form. We do depending on the dollar amount. If it's $100,000 or less, there'll be a form to complete. If it's over that, no form. We'll just ask for the financial statements. First thing we'll ask for is copies of the company's tax returns and the complete copies. All the schedules, all the supporting statements, everything that gets sent to the IRS we want to see. The first 2 pages don't really cut it. It gives us some information, but not a whole lot. We like to see all the schedules because sometimes there'll be a line in there. You've got a $4,500 expense over there, and then it'll say, see Statement 7. Okay, Statement 7 will provide some clarity as to what that expense is. We want to know it. It'll only help your cause. The more we know, the better. Okay? And the banks, depending on the dollar amount, 2 years, 3 years. So have it ready. Be prepared for it. You know, because the longer you take in providing it to us, the longer it'll take for us to provide an answer to you. Okay? If you can't provide tax returns, financial statements, income statement, and balance sheet for the year. Okay. The business plan. business plan is going to be important for us if it's a new venture. You know, even though the company's been around 2, 3, 4, 5 years, if you're starting to get into exporting, then we're going to want to see a business plan to make sure we understand what's happening, and also to make sure you've gone through the thought process. You don't want to start a new venture and find out, I forgot about this, I didn't know about that. Okay, so we're going to go through it. Want to see what kind of marketing plan you've got. Want to see what kind of projections, 5-year projections, and the projections, we want to see a cash flow projection so we can see what kind of revenue you're anticipating, and what kind of expenses are going to be associated with that revenue. And if you're just going to take, okay, at the end of the first year, I think I'm going to make $1 million. I'm just picking rough numbers. So if I make $1 million, I just divide that by 12. So from the first month to the 12th month, revenue is going to be the same. That's not going to cut it for us. We're going to want to see the growth. We're going to want to see reality play into it. We're also going to want to, and that also tells us a little bit about the thought process put into the new venture, which is why the business plan is really important for us. Okay. The use of the funds. If you're asking us for $100,000 to get the product up, running, and sent out, how is that going to be spent? How much of that is going to be on manufacturing or putting the product together? How much is going to be spent on shipping, packaging, all that stuff? Give us a breakdown. Again, the more information you can give us, the better it is for us. The better we're able to understand what's going on. And the better we'll be able to ask intelligent questions. There's going to be questions. Be prepared for it. We can't do a loan without asking questions. It's just in our nature. We want to know. We're going to be curious. Okay. We're also going to ask for your tax returns. As the guarantor, you're providing your support for the loan. So we want to know how strong you are personally. We want to see. And you know, even if what you're taking out of the company is nominal, or if you're taking lots out of the company, we want to see it. We want to see what other income is there. What other income there is, excuse me. So we can get a better idea of what's happening to you personally. And so that also leads us to the personal financial statement. You know, the personal financial statement is just a list of your assets and your liabilities. How much cash do you have in the bank? What kind of stocks? Life insurance? Do you own your own? Do you rent? If you own, what's your mortgage like? Do you have a equity line to support that also? Cars, what kind of cars do you drive? Do you have a car loan on it? Are you driving a 3-year-old Ford, or did you just pick up a nice Porsche? We want to know that, okay? Because that'll also tell us how the money is going, how you're spending your money too. It gives us a little comfort knowing all of that. And then ultimately, we want to see the contracts. What do you have? Is there anything to say, to confirm that, yeah, I'm putting this, I'm going to start exporting, and I've already got customers lined up. You know, doesn't have to necessarily be contracts. Might be something where it's a letter of interest, something to give us comfort that we're not investing in this, you're not investing your time, money, and effort to start an export, getting it all set to go, you're all ready, and then now I've got to look for a customer. I've got product, I've got everything. What am I going to do with it? We want to make sure that you don't spend your effort and all that time and then go, okay, I've got too much inventory now. I've got too much capacity. You know, I got no place to send it. We want to make sure you're successful. You know, because at the end of the day, your success means we're profitable. So we don't want to provide a credit facility that ultimately hurts you financially. So sometimes there will be a no. And hopefully, well, if we tell you a no, it won't seem that way at the time, but ultimately it's for your benefit. We don't want to give a loan or do a line of credit loan, what have you, that ultimately leads to failure. So, we want you to succeed. Last thing, and this is something we kind of ask after we've gotten the loan approval a lot of times, is your entity documents. If you're a corporation, we're going to want articles of incorporation and the bylaws, if there are bylaws, articles of organization, along with the operating agreement, partnership agreement, whatever you have. That helps us make sure we understand who has the authority to make decisions on behalf of the company. Okay. And then if we're going to go with SBA guarantee, there's some forms that we need. A 1919, which is the SBA application form. Everybody completes that. There's a 912 personal information, and then there's don't be insulted if we ask you to sign an IRS form. It's called 4506T. Basically, if we're doing an SBA loan, one of the things we have to do is collect the 3 years of tax returns, but we also have to send that form to the IRS to confirm that the tax returns you submitted match what the IRS received. It's a requirement. In a nutshell. Any questions? Cool. Thank you.
Thank you. Okay, so the last 2 pages on the handout I have for you, we have a list of counselors that if you need help with any part of your business plan or your concept, you can call SCORE, SBDC, MDA, or the Mink Center at the Women's Business Center at the YWCA. They have counselors that can help you. So SCORE has their office by SBA office in the Restaurant Row. And so you tell them what kind of help you need. They'll find a counselor that can help you with that topic. Okay. SBDC, their office is in Manoa at the Innovative Center, and they're also no charge, but they don't have as many counselors as SCORE does, so you need to call for an appointment. The Minority Business Development Center, they do charge on a sliding scale, but they have very good counselors if you're into contracts and government contracts. The Women's Business Center, they have just a few, but these are people that can really help you with your business plan, with your concept, and get your information together. Just a few months ago at one of, was it the kickoff, Jamie, that we said that HPU students would help? Okay, so there were, two companies that took them up on it. So they met with the HPU students. These are international students. They did a research paper, 75 pages of research for that client. So they went to, they were identified, they identified 2 countries. So they researched that company, how to export, what the products are, if they had any similar products sold there, what the price range was, the income of the people that are there. So it was really a lot of great information, and they thought that it was helpful to find that out. So if you want to get involved in this partnership, then just let Jamie or the HPEC people know. So with HPEC, we do have seminars. So if you're on our mailing list, we'll let you know about the seminars. The resource list that I have are websites that you can go for information. And then the counselor list is on that second to the last page. So there's a lot of information out there. Just take advantage of what's out there to help you with your company. And thank you very much for coming, for finding this information about exporting. We need exporting to balance our trade. We do have bankers here, so they're going to spread out. Just go to the banker you want to talk to, get some information, ask them whatever question you have. Michael Kim is from Central Pacific Bank back there. Then we have Dennis Wong, Hawaii National Bank here. Russell Liu from First Hawaiian, and Winfred Camry from American Savings. So just go and sit down with them and ask whatever questions you have. And then I can take the questions online.
Real quick, before we break up, are there any general questions for Naomi or any of the other bankers? There was one quick question online. At what point does a letter of credit make sense for a company? Is there a dollar amount when you're dealing in a transaction size, or at what point would a small company need a letter of credit?
Well, actually, if you're buying something from someone else and it's a big company, that company will say, I want a letter of credit. So it could be for 5,000, could be 3,000, could be a 300,000. So there's no point. It's just the break point is what the seller is going to require of you. Now, on the other side, if you're selling to someone else and you want to be assured that that person has the capacity to pay you, then you might ask for a letter of credit where you're the beneficiary. That company will need to go to their bank and show that they're credit worthy, put some cash down, and issue that letter of credit so that you know that that person has that money and can pay you for that.
Are there some countries where that's more common? Like, if you're a Hawaii-based company and you're selling products to somewhere, is there a market where it's more common to ask for a letter of credit? In my experience, it was Korea.
And Philippines.
In Philippines, okay.
Yeah. So it just depends on your buyer. You've got to know your buyer and make sure that they're going to be selling your product the way that you want them to sell it. Okay, so you don't want them to take your product and copy it, which has happened in China. So be very careful that you know who your buyer is. And it'll give the banker comfort that you know who you're dealing with. Get the U.S. Commercial Service Officer to help you because they have people that are stationed in foreign countries that can check out that buyer or check out that market. So use the resources that are available.
Does it help with using the service for American Chamber of Commerce in that regard?
American Chamber of Commerce.
Let me repeat the question. Does it help to use the American Chamber of Commerce? And you can answer that, but I would also add that, yes, in my opinion, there's American Chambers of Commerce throughout the world. In bigger countries, there might be, let's say China, for example, there's an American Chamber of Commerce in Beijing, American Chamber of Commerce in Shanghai, and elsewhere. And what those are an amalgamation or consortium of American companies operating in that region. And it's a vast wealth of knowledge there where you could go and talk to people who have done similar things to what you're trying to do. I often find when I'm counseling the exporters that people feel like they're the first ones that are trying to do something like this, but there's often thousands of people throughout history who have tried to do similar things or are already doing it fairly successfully, and you might as well learn from them. So in my career, I've been a member of American Chamber of Commerce in Tokyo, Seoul. I was very active in Singapore, in Taiwan. And it's just a great source of knowledge. And often they have foreign or non-resident membership. So even though you live in Hawaii, you could be a member at some of these chambers of commerce for like $100 a year or something like that. It's extremely useful. And if you're traveling in the region, I highly recommend you stop in and visit the American Chamber of Commerce in the country or the city that you're in. But do you have anything to add to that?
Well, boots on the ground is always good because they're there to see who's really doing business. And it really depends on that chamber group, on what kind of expertise they have. So on the other side, if someone were to ask our Chamber of Commerce to help them with marketing or something, they may not get it from our chamber. So it really depends on what chamber and how much they're able to give you. So the U.S. Commercial Service, though, they're there to help companies export. So they're trained to do it. So maybe do both sides, the chamber and the U.S. Commercial Service. Okay, so any other questions?
No. With that, let's break up. I'm going to shut down the webinar. So thank you to our online attendees. We'll split up and talk to the bankers that you'd like to. Thank you very much for coming, and please look forward to some of our upcoming seminars. Check the website. It's Invest.Hawaii.Gov and HawaiiExportSupport.com for the HPEC website. So thank you very much.
Thank you.